Welcome to day number 2 of the 3-day live challenge, where in just 3 days, I'm going to teach you how to generate monthly income using 3 simple options bots and create a passive income stream for 2026. Whether you have no experience with options or no experience with bots, this will work for you. It's going to be super easy. And whether you have a small account or a large account, this can work for you. I'm just going to show you a proven system to follow. And today is the day where I'm going to give you that system. I'm going to give you the bots so you can just one click import it if you don't want to do any work. But I'm going to walk you through the entire process. The whole goal of this challenge is for everyone who attends and participates to walk away with a custom options bot portfolio designed to generate consistent monthly income. The first day, we went over understanding what different market phases are and the best strategies to run in those markets, and then how to have a lot of strategies that come together that help protect our accounts. Today, we're talking about taking all those strategies and automating them into a full-fledged options bot portfolio system. And then day number 3 is going to be all the small tweaks and settings you can make to your bots to increase your win rates. So today's outcome is building the fully automated options bot portfolio. So obviously, this is my favorite day. But before I share anything, I do need to share the legal disclaimer, which is I'm going to be sharing results, my own, others, and just because other people did it or I did doesn't mean you can too. I cannot guarantee results, and this is for educational training purposes only. So, long story short, I'm not licensed, trading is risky, and you are completely responsible for your own decisions. Sweet. So, who am I? As a recap, if you don't know, my name is Austin Booley. I live in Houston, Texas. I worked as a software developer most of my life. I make about $5,000 per month on autopilot using options bots, and I've helped over 20,000 people make money from the market, and it's been a really fun journey so far. But it didn't always start there. It took me 4 years and blowing up 2 accounts to figure this out, with one of my largest losses being $15,000 in a single day. But I was able to learn about option selling, and that gave me the consistency and the profitability that I was looking for. But I was still stressed and had no free time because options are leverage. So as I was trading options, I had to constantly watch the market to make sure that one spike in volatility or one market crash overnight or something like that wouldn't wipe out my account. So I was constantly stressed. That's when I had my light bulb moment after reading an article that said 70% of trading volume is done through bots. Now, this article was written in about 2021. So imagine now, 4 years, almost 5 years later, it's probably closer to 95% of all trading is done by bots. So the realization was, if I'm not using bots, then somebody's using them against me. And so that's when I went on for 2 years to create this tool called the Options Auto Trader, which automates your options trading in a very easy way. It increased my profits when I started using it because I got in and followed the strategy perfectly every time. It decreased my losses because I was able to monitor trades and get out quicker than I could myself. And it gave me more time and peace because I knew that my trades were always being protected for me, especially overnight when I do things like futures. But not only was it doing that, but my results increased because of that. I was going from making about 3,000 a month to now making about 5, 6,000 a month. And it's all on autopilot, going from manual to auto. So I got my time back, but also made more, which was great. But I got what I truly wanted, which was time with my wife, because I tried to spend time with her before and my mind was just so obsessed with the market, what's happening. And it was just a lot of brain fog because constantly staring at screens, and it wasn't good for me. But being able to have the options auto trader automate this for me gave me the peace of mind to actually spend time with her and be fully present. And that's what I loved. I used this software with a lot of beta testers, people who had traded options before, people who had it, large accounts and small accounts, and they all absolutely crushed it. And even to this day, 2 years later, we still have people making money every single week with this platform and with our bots. We have a leaderboard inside of the software where you can see what is happening with live accounts today. That leaderboard only pulls from live verified profits and live verified bots, not paper bots, not paper accounts. This is real money being made in the market today, and it's super cool to see. Now, yesterday we covered what a portfolio is and why we need one. Too many traders, options traders, but traders in general, rely on one strategy. They're looking for some holy grail strategy that they just need to do one thing and they can make money in every market. That is not the case. Every strategy can work and be amazing, but only if you use it in the right market. I was actually messaging back and forth with one of the original beta testers of the software called Nick. And he was like, Austin, I was crushing it in September and October. Like, I was making 100% return on my money, then 84 and then 84%. And then it went down when the market went down for a few days and I absolutely lost it. I'm like, good, you'll learn what we were talking about in day one, which is you may already have great strategies. It's about taking those strategies and making sure that you only run them in the best markets. And so now that we know, hey, this strategy that he has runs amazingly well in bullish markets, let's make sure that we set up the bots that strategy only runs in bullish markets or only runs in September and October if you want to be seasonal. So that is what we're doing, identifying what works well, doing what works well and continuing to do that, and then having a ton of ways to protect those bots in case something goes wrong, aka building a portfolio of strategies for every scenario. Now, I know I'm getting a little complex here, so I will simplify it in just a second. But one last thing, this is what a core portfolio looks like. We have a main money bot. This is where most of our income comes from. A lot of people like to do 0 DTE, 1 DTE, fast trading assets. The problem is that's not where your consistent money maker will come from. It's going to be a long-term bullish bot, which looks like trading a put credit spread 90 days out, trading a 111 120 days out, a short put 60 days out, something like that. Those long-term bots, those long-term bullish bots is going to be where 80%, if not more, of your total portfolio money is made. So make sure you focus on the long-term bullish bots because that's where the money comes from. And then with that, pair it with a long-term bearish bot, something like a put debit spread, a long put, something like that. So that when the market is trending up, you have your main bullish bot running. That's probably going to run 80 to 90% of the time since the market's almost always in an uptrend. Then you'll have your long-term bearish bot, which is going to run when the market's downtrending, which this is all what we're setting up today. This is what the whole training is for today, to show you how to take these ideas of a long-term bullish bot, a long-term bearish, and actually turn it into a real bot that adjusts with the market in real time. And yes, I'll give you the bot template so you can steal what I'm building today. So that is where the main money comes from. We also need protection bots. When we think about what happens in the market that causes me to lose money, if we're talking about specifically as an options trader, it comes down to two things. VIX is one of the main reasons that we lose money, comes from a volatility spike, a vol crush or something like that, and crashes. Crashes hurt us a lot. So we need crash protection. We need an overnight crash help. We need an intraday move and things like that we can build bots around so that we have a one-off trigger that does very well. One of the very early beta testers of the options auto trader did this insanely well, where he had his long-term bullish bot that was literally printing money for him. And then he had a VIX protection. When VIX went up over 5% in a day, he immediately bought puts, and that helped protect his account and also cushion some of the losses he had from the long-term bullish bot. And so that's the great part of adding in these protection bots where you see you're weak. The easiest way to see where you're weak is to look at your trading over the last 3 years, say, when have I lost money? What happened? What market was it in? And then building bots to take advantage of those particular markets. Anyways, that was a lot. Let's go into building these together. Let's make it super simple. I'm going to dive in. So if you haven't yet, go start your 30-day free trial to the Options Auto Trader. This is something I never do, and it's actually only available for you guys during this live challenge. So after tomorrow, you won't be able to do this. But that 30-day free trial, you can go to go.optionsautotrader.com/live -challenge-confirmation, and you'll be able to access that 30-day free trial. Most of the times it costs $27 to start a trial to help us cover the data costs, because it does get very expensive. But for this live challenge only, I want to say thank you guys for joining me. Let's do this together. You can start your 30-day free trial by going there and getting started now. It's going to take you over. Just enter your email, name, credit card, create your Options Auto Trader account, and you'll be good to go. You can easily cancel before it ever renews if you don't end up liking this, but I doubt you won't, because you're going to love this. Let me first give you a plug and play version for beginners. If you have never done options before, you never done bots, you just want to know what is a solid plug and play model that I can follow. And then after that, I'll get into a screen share and we can build some out together. But once you're a member, even a free trial member of the Options Auto Trader, you get access to what is called our strategy database. These are strategies that I have been using over the last 8 years of trading to help me see great success. That has been things like bullish strategies, bearish strategies, neutral strategies, all these things, and they're all preloaded in there for you. So with one click, you can start using these bots that are based on and designed off of proven trading strategies that have worked in long-term markets, and I've worked in back tests over the last 10 years, and I've also worked with real money today. So they're divided into different categories. You have bullish strategies, bearish strategies, and a neutral strategy. Now, let me show you how you can pick these to create a great portfolio to start off with if you're someone who just wants to plug and play. If you have a small account being under 25 grand, under 10 grand, something like that, here's a great portfolio that you can build. You'll go into the strategy database. You'll click for your bullish strategy, a put credit spread. This thing costs about $2,000 per trade. It can easily be changed to do less, but by default, it does 2,000. And this is a great way to get started. This has made a lot of members a lot of money just by using this strategy alone. So this can be your go-to bullish strategy. You can do a cheap 14-day hedge, essentially a long put for 14 days as your bearish strategy to run in bearish markets. And if you have extra funds, you can allocate it to a neutral strategy like a strangle. This one has also made a lot of our members money as well. So this is an example of 3 strategies you can pull together to create a small account portfolio. And again, you can see here, when you put these together, it does outperform the market very well. You can see the green is the overall market, and this is what the portfolio looks like of these strategies together. So not too bad. Now, what if we're having 25,000 or more? I'm going to show you what this is basically what my portfolio looks like, which is my bullish bot is my 111, which is a ready, steady, retire type of bot. That one is my go-to for larger accounts above 25K. You'll click on that. You'll start using that bot. Then I also run the cheap for 14-day hedge. Sometimes I'll run a correction hedge, just one of these as my bearish strategy. And then I'll occasionally run the neutral strategy to add on to that as well. So these are examples of a small account and a large account. You can see here, both of these outperform the market. Why? Because we're running the best strategies at the right time. Here's a simple portfolio, which is just making it super simple, having one bullish, one bearish. And if you have just those 2 things, you're going to do great. That's why I said your main money makers are going to be where you just have a bullish spot and a bearish spot and you put them together. And then if you want to up those returns, you add all those protection bots. So I hope that was clear. I hope that was simple. That's how you build out different portfolios depending on where you're at. Now let's actually build out something together. All right. So I'm going to share my screen by closing out of this. I'm going to go into the options auto trader. This is the live account. Let's go into a demo account and we're going to build these out together. I should have pulled this up before, but let's go to trading view. Let's map this out. Okay. So as I mentioned, there's something that we want to do when we build out these portfolios. It's something quite simple, which is just defining what is going on here. As I mentioned, our main money makers is going to be a long-term bullish. So I'm going to write out what I'm going to do and then we'll build it together. I'm going to build a long-term bullish spot. So long-term bull. I'm going to build out a long-term bearish. This is going to be my main bearish spot for if the market crashes. Then I'm going to build out a daily bot. So I'm going to build out my daily income bot. This will give me some daily activity for trades. So this is going to be a 0/1 DTE trade. Then I'm going to have my protection bots, my favorite one being a VIX Vol Spike Crush. This is Vol Spike bot. Why is this one? Because most of the times with these, I am actually quite short on volatility. So if volatility spikes, I can have a lot of losses. So I put this as a protection. So you can see here, this is the money making bot, the long-term bullish, long-term bearish combo. I add the daily bot to help juice returns, and I add the VIX Vol Spike to help decrease my losses. And so that is where the whole ensemble of bots come together. This is a very basic one that anybody can put together. So let's build this out together. Inside of the options auto trader, super simple. Let's start off with the long-term bullish bot. We're going to go to create auto trader. We're going to go to pick an auto trader, which is what you want to do if you want to quickly get started. You can pick from these bots here, the best income bots, all market, small accounts. You can check out the whole strategy database, but I want to build it out with you. So if I go to here and I go to create an auto trader, I'm going to click on create. Now this defines, basically we just need a solid bullish spot. So that's either a put credit spread or that's a short put, or my favorite, a 111. So if you have under 25 grand, put credit spreads probably your go-to. If you have above 25, do a short put. If you want to do futures, do a 111. So that's how you would break down each one. I'm just going to do a credit spread for short. That's the easiest thing to do. We'll do it on SPY. And then we like to do 90 DTE or some long-term duration. That has the highest win rate, the most credit collected. If I want to make this a super amazing trade, I'm going to go to about, let's say 16 delta, 1 standard deviation, which means I'm going to sell the put at the 16 delta mark. -1 means sell. This is a put, delta 16. From there, the one that I'm going to buy, this is a +1, is I'm going to buy the put that is strike offset. It is about, let's say, 20 bucks away. This is going to make it so about my risk per trade is about 2,000 so that I know what my defined risk is per trade. If I come here, how often is the bot going to enter? That really depends on my account size, right? If each trade costs $2,000 and I'm going to be in about, it takes about a month for these trades to close, right? Then I'm going to be in about 4 trades at once. So 4 times 2,000 gives me 8,000. So if I have 8,000 in my account, then I'm probably good to go here. If I have more than 8,000, maybe like 16 or double that, 32 or something like that, then I can enter in more times a week. But I'm going to stick with Wednesday once a week, as that's just a classic, normal, common cadence to enter trades. Next, what I'm going to do is, this is a bullish bot. I guess we'll cover that later, actually. We'll just start with the basics and then we'll update them. So this is a bullish bot. So we're going to run it once a week on Wednesday. I'm going to click save and continue. We're going to do a 50% take profit and a 200% stop loss, which tends to be average. But I'm actually going to come in here and just change it to 21. It tends to work out well if you ever tested Tasty Live. This is a great structure, especially since I know that when they put credit spread, I've already capped my losses to 2,000 with using the $20 wide strike offset. I'm just going to pick the one that's $20 below. So I already know my risk is capped. And so by doing this is actually going to increase my win rate quite substantially. 50% take profit, 21% early management. We can continue there. As I mentioned here, the buying power is 2,000 for this trade. So I need to put in at least $2,000 per trade so this bot can execute. Obviously, if I put 2,000, okay, so this is saying how much money should this bot use? I'm putting 2,000. That way it can at least enter in one trade. If you want 4 trades running at the same time, you're going to need about $8,000 for this bot. I'm going to put 2,000 for this demo example and save and continue. Just like that, you can see here, I'm going to sell one SPY put at the 16 delta. I'm going to buy one put at $20 offset. It's $20 below. Enter in weekly on Wednesday. 50% take profit, 21 days. I'm not going to let it expire in the money. And then $2,000 buying power. So I click save and set auto trader live. We have this bot right here, SPY 90 DTE, put credit spread. Come in here, click on the settings icon. I'm going to change this to LT bullish, my long-term bullish bot. Perfect. So the question is, okay, cool. Now that we have the long-term bullish bot, how do we adjust it to the market, right? This bot is great. It will run great, but if the market turns around, the market goes bad, this bot will go bad. So I want to make sure that, as we talked about in yesterday's class, how do I make sure I only run this strategy in the right markets? So I'm going to go to this bot. I'm going to click on the gear icon. Underneath entry rules, I want to make sure I'm only entering during the right times. I click show all settings. I can come in here. So what I'm going to do is I'm going to go to the indicator settings, and I can do something super simple, which is just have it be based on a simple moving average. What does this mean? Let me show you on this chart how simple this can be. If I go to indicators, I type in simple moving average. You can see it right here, and I add it to the chart. A good solid one to use is going to be something like 50 or 100 or 200. I'll show you what 50 looks like. You can see right here, 50. If I set the period to 50, this means that whenever SPX is above it, it tends to trend higher, right? We tend to have a nice little uptrend. When it goes down below, that's when we start seeing red. And so we might want to stay out of it during here, right? Stay out of it during these under phases, right? Only enter up here. Not going to be perfect, but it's at least one way that we can dramatically cut down on a lot of losses. Because if we run a bullish strategy during this market, you're going to lose tens of thousands of dollars depending on the strategy you're running, right? So you definitely don't want to do that. So this is a simple way to not do that. And so simple moving average, we're going to do 50. That's what I showed you on the chart. And we want to make sure it's above because it's a bullish strategy. So if what we're looking at SPY is above the 50-day moving average on a daily chart, then we'll enter. It just means like if it's bullish. So just like that, not only do I now have a very great long-term bot that can generate great returns that people have used before in the past. This is a strategy that's literally been used for decades by people, but now it will execute for me perfectly without the emotion, without me messing up strike prices, and it will now be adjusted to the markets that it's only trading when we're in a bullish market. This is the LT bullish spot. I will give this to you here inside of the Zoom chat in just a second, but I'll first build out the entire portfolio with you. So that would be step one is the LT bullish. I mentioned we're building the LT bullish, we're building the LT bearish, daily, and then a VIX vol spike. I hope that's making sense so far. Looks like we got about 50 people in here. Give me a yes if that makes sense so far. I will get to Q&A at the end, but I want to make sure this is clear. We're making sense, at least at some level. Sweet, we got a yes. Perfect. Glad you guys are getting this. Awesome. Let's build out the next bot. Okay, create account. We can create an auto trader. Now, for our downside, there's two main bots we can use, or two main strategies for a bearish bot. That's either just a put that we're going to buy a put and profit when the market drops, or do something where we know our risk and kind of can control things, would be a put debit spread. I personally prefer put debit spreads for my long-term bullish bots, bearish bots. And why is that? Because if I'm using this strategy, that means my profit is known, my risk is known, and it also is a debit trade. So is buying a put. But I like it because that means that as VIX increases, because the market's dropping, this will actually go up in value. So I'm profiting both on direction and volatility when I use a put debit spread. So I'm going to click on a debit spread. I'm going to keep it on SPY just to keep it consistent. I want to keep these shorter, about 14 days. Why? Because the market crashes a lot faster than it rises. And so I don't want to be in trades 90 days because the crash is only going to last a week, 2 weeks maybe. So that's why I put in 14 days. Anywhere from 7 to 14 is golden. I'm going to put in 14 for this. I'll do a 30 delta. It's nice to come out closer for these. And then I'll make my strike offset 5. So I know my max risk is $5. Actually, we'll do 10 to $1,000. This is a pretty good setup here. Now, here's how we're going to do this. We're going to enter in once a week, but we're going to select all the days. Now, I'm wondering, why would we do this? If we look at the market, we don't know when it's going to crash below this 50-day moving average. It could be a Monday, Tuesday, Wednesday, Thursday, Friday. We don't know. So if I set Wednesday on this and the market crashes down below it on Thursday, that means it's going to wait Friday, Saturday, Sunday, Monday, Wednesday, and then place the trade. And I would have missed out on all this downside move that I could have made money on, or at least help protect the account, right? So on bearish spots, set all the days as active. That way you're going to instantly enter whenever the market starts downtrending. We can also do any sessions so that we can make sure we're entering any time of day whenever the market drops below that level. And we're going to come here to the indicator settings, simple moving average. We're going to keep the 50-day, but this time we're going to build a one to the downside below it. So now we have one making money to the upside, one making money to the downside, and these are our long-term bots. I'm going to click on save and continue. Take profit. I like to take about an 80% take profit, want to take off most of the money, and then either way, I'm just going to let the trade be on. So I'm not really going to have any stop losses on it. I just want to take profit from this. And if not, I want to leave the trade on as a hedge. That's what I do. You can change it to however you'd like. When it comes into management settings, I obviously need to allocate some money to it. So let's say 2,000, but there is an adjustment here that I like to do because my bullish spots are only going to make me so much money. I don't want my bearish spots to take over the bullish. It means I don't want my bullish profits to get turned into negative because I'm spending so much money on these hedges. So that's when I'm going to set a number. Maybe that's 2 or 3. 2 or 3 is typically good. I just want to make sure that you balance out the profit from the bullish and the bearish, that if it goes bad, they're breaking each other even instead of one taking over the other. That's why I do that. You don't have to, but that's one way to do it. So that would set up my put debit spread on SPY. It's going to enter any time of the week, any day, given that it's below the 50-day SMA. It's going to take profit at 80%, and it's only going to allow 3 open trades at one time. So I can save this auto trader. And just like that, now I have my long-term bearish spot. So I'm going to click on that, click on the gear icon, say, hey, we're going to do a I think you called it LT. Let's keep it consistent. LT bearish spot. Perfect. Just like that. Save and close. Now I have the main income makers of my portfolio. If we look at the market, if we're above here, I'm going to be taking one of the most consistent trades ever, which is a put credit spread, long-term on SPY, super liquid. And this strategy is traded by so many traders and does so well. And now we're going to avoid when it does the worst, which is during these red periods. And so we get to avoid that automatically using bots. Awesome. Now, what happens if the market does reverse? We're going to get caught in some trades. We want to make sure that those trades that are open when they hit their stop loss, that we help buffer that and even make money from it, which is why once we go below here, we'll start running our bearish bots. And that's all handled for us, which means no more watching the news, no more watching the markets. This is all handled for you. These two long-term bots, if there's nothing else you take away from this, set up a long-term bullish, long-term bearish, base it off some way to understand the market trend, and then you'll be golden. Everything else that I talk about moving forward, like the daily bot and the vol spike bot, are totally extras. If you set up the bullish bot and the bearish bot for each of these scenarios, you will be good to go. Got it? Sweet. All right. I'll be sharing all these bots with you as templates here at the end. So you will get these for being here. So thanks for being here. Let's build out the next one. As I mentioned here, we have the long-term bullish we just built out. We have the long-term bearish we just built out. Now I'm going to show you one of my favorite daily bots to generate some daily activity. So you can find that inside of Pick and Auto Trader. You can find it right here, the daily income bot, but I want to walk you through it. So if you're super beginner, you don't want to build this out, just click on start using this bot. It's right there. If you want to see how I build it out, I'm going to do that. So let's go here into step number 2, which is going to be, this is a credit spread on SPX. This can either be a 0 DTE or 1 DTE. I prefer 1 DTE. We can do the put at the 30 delta or something like this. You can sell, and then we can define our risk to whatever we want. If we only want to risk 500, we'll do 5. If we want to risk 1,000, we'll do that. If we want to risk more, again, the more you risk, the more you make, right? So let's just make it 5, small account friendly right there. SPX 30 delta right here, and then we're going to buy 5 below. So that means we're only risking $500 per trade. We'll enter this in multiple times a week. We'll allow it to enter every single day. And we'll only enter in the morning sessions, only during the first, let's say, 3 hours of the day. And like all things, if we're creating a bot, should also be tied to a market trigger, right? Like I mentioned, the problem with most bots is that people pick one strategy and they rely on it too heavily, and the market changes and they lose. So we need to make sure that we not only pick a great strategy, which the Options Auto Trader gives you, a strategy database of great strategies, but you need to align it with the right market conditions. So this is a very great put credit spread, but we want to make sure that it adjusts with the market. So I go to indicator settings. So this is a short term. I want to do my favorite right here, which is opening range breakout, which means it looks at the first X period of the market. So let's say the first 60 minutes. So the first hour of the day, charts out the high and the low, and then it waits for one to break out. Since it's a put credit spread, it's a bullish strategy. So breakout high. This means I'm going to look at, or show you right here. Is this where the market opened today? Right here. It's going to look at the first market to open. You can see here, it's going to open the market right here. This is going to be a high in the first hour. We chart out the first hour. This is like the first to 10:30. This is the first hour of the day, which means this point right here becomes our high. As soon as this high gets broken, it's then going to enter the trade and trade that up. So that's what that's going to look like. Super simple. That's right here, 60-minute breakout high. And that's how we can adjust to the market trend. How I manage this trade, I do a 40% take profit, roughly 50% stop loss, or short strike is how you can manage this. And then again, it only takes $500. Strike offset's 500, the $500 per trade. And just like that, I'm now good to go. Perfect. I can authorize this. And this is my daily income bot that will profit whenever the market trends up. So I'm going to come in here to SPX 1 DTE credit spread. Here, I'm going to change the name to my daily active bot, or just something to happen daily. And here, save and close. Perfect. Go to dashboard. Now you can see here my long-term bullish, long-term bearish. These are the core money makers. Here's an extra bot just to throw in there for some daily activity, because these will only place about once a week. And then the daily activity here. Okay, cool. Now that I'm starting to build out this portfolio, the next thing I need to think about is, where is my risk coming from? These are very short. This is a very short strategy, short. Since this is all really short, except maybe the bearish, then I need to make sure that I have something to protect me against short. Short options are going to lose a lot when volatility spikes. So that's when I think, okay, cool. A scenario I need to prepare for is a volatility spike. So let's create a bot for that. I'm going to come here to create auto trader. I'm going to come here to create strategy. I'm going to think, okay, what strategy profits when volatility spikes? That would be a simple long put. A long put would do incredibly well. So I can do something like SPY, 0 DTE to take profit that day. Do something like 50 delta, aka like at the money. So pick at the money. So wherever the stock is currently trading, just sell it there. I can go $5 out of the money. That's probably great. All right. So slightly out of the money. And then I'm not going to sell it. I want to have a positive. I'm going to buy it. So this means on SPY, I'm going to go to the 0 DTE contract expiring today. I'm going to go to the put column. I'm going to go $5 below on the strike. I'm going to buy one. So that's how it looks like and reads. After that, I'm going to talk about how often am I going to enter. I'm going to enter, let's just say, multiple times a week, Monday, Tuesday, Wednesday, Thursday, Friday, every day, any session, because I want to enter anytime. Actually, yeah, that's fine. I'll do any session. And then from there, market condition, right? So we want to make sure that we're entering on market condition. So one way that I can do this is I want to enter on red days. So make sure that we're entering on a red day, right? I want to make sure that if I'm entering a put, the market's already going down. But not only that, I want to come in here to VIX. Okay. So when I'm looking at VIX, I want to make sure that it's actually doing something and it's moving. So I'm going to put right here 5. What does this mean? Minimum intraday VIX percentage. This means if VIX moves up 5% or more that day, then it's going to enter the trade. So what do I have here? I have a long put that when SPY is red that day, and volatility that same day in the one day has gone up over 5%, meaning something crazy is happening. I have the ability to now enter a long put for that day and make some profit from it, right? Because that's going to move quickly. The market's going to drop. And now I have some way to help cushion any of the losses that temporarily come from my long-term bullish spot, right? Obviously, you'll hold it throughout the duration. Most of the times it will bounce back. Nothing to worry about there, but this still helps cushion the intraday losses that you might be seeing. So this right here is a way to easily integrate what VIX is doing today to trigger out these bots. Because remember, almost every option strategy is amazing. If you align it with the right market, that's where it truly succeeds. Okay, take profit. We can do something simple like 150, 200%, whatever you want that to be. A stop loss, you can just let that run out. You can even set 50, however it is you want to run this. Typically, just let it run out, take 150% take profit, and that will help cover any of the losses or help cover some of the losses. And so you can do that. Obviously, change that to however you'd like. And then 500 here. And save and continue. So just like that, I'm going to buy a SPY put, $5 out of the money. I'm then going to buy set to the afternoon session. Let's go back. While we're checking this, I don't want to be afternoon. I want to change that to any time. Okay, yeah, so it's a display issue that I'll fix here in a second. But right here, so daily at 1 p.m. afternoon session, enter on red day. The VIX intraday move is greater than 5%. Profit at 150, and then close 30 minutes before the market closes if it's in the money. That way we don't have any assignment risk. And then just that. So we'll save and continue. Save auto trader. And just like that, now I have my VIX protection here. So not too bad. If I come here, let's name this VIX ball. So this one will not trigger often, but when it does, it's a nice one-off bot to help protect the other bots. Long-term bullish, long-term bearish, these are the money makers. This one adds some daily activity. This one helps protect this one and this one if something goes wrong. And that is how you build out a portfolio. Then you just keep thinking, if you want to keep expanding, okay, I'm going to run this portfolio for a month. I'm going to see where it goes wrong. And wherever it goes wrong, I'm going to build a one-off bot to help protect it from it. And so that's what your thinking behind a portfolio should be, is build out your long-term bullish, your long-term bearish, let those run. Those are going to be your core money makers. And then as things happen, where you're like, oh, that was more loss than I want. Then you go in there, how can I build a one-off bot that protects from this scenario? And the easiest way to do this is to just think back my last 3 years of trading. When and where have I lost money? Can I build a bot that profits from that specific situation? Or even better, can I build a way where my bots do not enter during that specific time. And so that's how you build out the portfolio. I'm going to share these with you so you have access to them so that you can with one click import them into your Options Auto Trader account. Let me show you how simple this is. Okay. I'm going to click on the share icon. I'm going to click on Share Auto Trader. This is going to copy the link. Here's what it looks like. I'm going to paste this inside of Zoom. You're going to click on it. It's going to take you to this page right here. It's going to say, hey, Austin Booley shared the LT Bullish bot with you. Perfect. And you're going to be like, cool, I agree. I like this. I like what it does. I want it. I'm going to click on Clone Auto Trader. You're going to click on Clone. You can watch a video on how to clone it, or you can just do what I'm telling you now. Click on Go to Template. And now it's going to take you to the strategy database under your templates. And you'll see right here, the most recent one is the LT Bullish bot. You'll just click on Start using this template. And now you'll have that bot imported. So that's how simple it is to get going. So let me copy and paste all these bots for you into the Zoom chat. Then we will make our way to the Q&A section. So copy the LT Bullish. I'm going to pull up the Zoom chat and go in here to share to everyone. LT Bullish bot has just been shared. Let me go to the LT Bearish, long-term bearish. Oops, go to the settings. Okay, we're gonna go to LT Bearish. That bot has been now shared in Zoom. So you can click on that link and just import that bot template for later, whether you want to use it now or at another time, you can. Here is the daily activity bot. And last but not least, the VIX Vol Spike bot. Go in here to settings, share auto trader. Okay, and last but not least, VIX Vol Spike. Perfect. If you guys are on Zoom right now, you can go to the Zoom chat window. You'll be able to see these. Click on the templates, click on Clone Template. That will add it to your template library, and you can go back at any time and use it. Now that we've gone through all, that is basically all I have for today is installing. So let me quickly screen share slides here, and then we'll finish out with Q&A. Let me make sure, can you see my screen? The slides, perfect, we're good to go. Awesome. So I just give you the bot templates. Click on the template link, click on clone. It will take you to your template library, and then you can install it just like that and set it live. So this is your homework. Type yes if you will do it. It's super simple. Start your 3-day free trial to the Options Auto Trader if you haven't done it yet, if you don't have an account. Go and create your bullish long-term bot, your bearish long-term bot, and then create any ancillary bots you want, whether that be the daily activity you want, you just want to import, the vol spike, if you want to create a vol crush, whatever it is you want to do, set those bots up and you can have those running to create your ensemble of bots. If you're someone who just wants to see how it works out first, no worries, you're given a paper account with the Options Auto Trader. Set up this portfolio on paper, see how it runs, tweak things as you wish. Then when you're ready, you can easily move them into your live account. So your homework is super simple. Log into the Options Auto Trader if you don't have an account yet to start your 30-day free trial and set up your portfolio, which looks like the main long-term bullish, main long-term bearish, and then set up any other bots you want to help support those. Perfect. That was day 2, where we actually went through the options bot, the options automation. We've been on here for about 40 minutes now, which has been awesome. So I hope you guys learned a lot. But now let's dive into Q&A. I'm going to be here for about 20 more minutes with any questions you guys have. If not, we can end it early. But make sure you're here for day 3, because day 3 will be awesome. I showed you how to do the core things, which is take a great strategy and run it at the right time, done by automation. So it removes the emotions, remove the checking, remove all the hard work, and just runs for you. This is a simple way to set up a portfolio that can profit for you no matter what 2026 does. That is the core part. But tomorrow, I will be talking about the small tweaks, the small settings that can be enabled for these bots to help increase your returns, decrease your risk, and control things a lot better and a lot smoother. So you do not want to miss day 3. Make sure you're here tomorrow at 12 p.m. Central, 1 p.m. Eastern. You don't want to miss out. All right. For any questions, put them inside of the Q&A or the chat channel, and I'm going to do my best to get to them. Sweet. Here we go. I see some questions. Let's get this party started. Let's see. I will get started here. If I missed your question, please retype it. There's a lot here. Okay. I'm going to start with Richard Hammer because that's what I'm seeing furthest back. He says, do you ever use 30-minute or hourly SMA for trend indicator? So the way that it's split up is SMA works best for long term. So when you're looking at the daily chart and you're doing trades that are 45 days out or further, so 45 DTE or further, use the SMA. If you're doing something shorter, like less than 45 days, maybe like 0, 1, 15 DTE trades, that's when you'll want to use the EMA, which is done on the 1 minute time frame. And so you can do that. That's typically how I find it works best, Richard. Helen says, stuck till next month with essential projects. Will make the time next month. Please do make sure you get this set up before the end of the year. Why am I saying that? Because we always have the end of year kind of slump, which leads into the beginning of the year rally. Again, you may have heard of the December rally, things like that. I want to make sure you guys are ready to take advantage of it. These bullish spots can truly profit well. And you have them set up before like literally midway in December. So get them set up really today. It takes less than 30 minutes. You can do it in 5 minutes just by copying these bots and set yourself up for the December rally for the rest of this year. And really just for 2026 is a great way to produce income. Keith says, how do you backtest a bot once it is built? I have a very great tool that I will share with you tomorrow where you can actually backtest through. But for now, you're going to have to use a third-party backtester. I built my own. I'll be sharing it with you guys tomorrow. Another reason to be there. But for now, you'll have to use another backtesting software. Mark Johnson says, advantages and disadvantages to using a put debit spread as they call credit spread. Yeah, so I assume if you mean for the bearish bot, okay. For the bearish bot, the market is going down, you're right. Both of those take profit on the direction of the trade. A put debit spread will make money as the market goes down. A call credit spread will also make money as the market goes down. But we must factor in what is volatility doing? Because what volatility does also dictates a lot of the options profit. And so when the market is dropping, volatility is at the same time going up. And if volatility is going up, any short option strategy, like a call credit spread, will be suffering. And so you will see an open loss, even though you're right on the direction of the trade. So a put debit spread works best because the profit's on the direction, the downward trend. And as volatility goes up, put debit spreads, because they're long trades, actually profit from that. I pick a put debit spread because of that. Johan H says, what would the amount of the portfolio to make this run? It really just depends on what you're running. The portfolio that I made with SPY can easily be run with a $5,000 portfolio, just one contract. We won't be running multiple at the same time, but 5,000 could be run with. If you have 15 grand, you're more than good to go. Obviously, as you scale up, it's going to get a lot better because you have more options, more strategies you can use. But yeah, around 10 to 5,000 can be run with the bot that I just like with the portfolio, the 4 bots that I built out for you today. Ocean Hammer says, do you ever use QQQ for bots? I don't. I like staying focused on SPY. There are a lot of members who do. Some of the best bots on the leaderboard are QQQ bots some months. Yeah, you can. Just don't. Shaylin says, Austin, and one of the bots you wanted trades to be taken anytime, but bot showing trade taken at 1 p.m. How to fix this? Yeah, I don't know if you mentioned heard my little side comment while we were doing it. I set it to anytime settings, and then the review page said 1 p.m. That is incorrect. I don't know why it's saying that. It'll get that fixed. But as long as your entry time says any session, it is any session. You can ignore that for now. Aiken says, do you have bots for leaps? I don't build any bots for leaps, but you're more than welcome to, right? You just literally go into the bot. Here, let's just build out that together. It's super simple to build out. So we want to build out a leap bot, right? We're going to click on create auto trader, create. Let's say it's just going to be a naked option. So do I have a naked call? You can do it on whatever you want, SPX, SPY, whatever. Those tend to be about 365 days out or something around there. Super far out. You can pick that 365, pick the trade you want to enter, and then set up the bot like that. Yeah, you can easily run leaps. I don't have any built out. It's not something I personally run, but you can easily build them inside of the options auto traders. Good question. Mark Jonathan says, how to change the amount of contracts for the daily active bot? Great question. Yeah, so by default, it's only going to be one contract. Let me actually just stay screen sharing here. So if we go back to the daily bot, we look at it. Let's say I want to increase it, right? Because I'm just trading $500 per trade. Maybe I have 2,000 or 3,000 I want to trade with. You can either increase the strike offset, and this will risk more and also make more, or you can increase the quantity. So I increase 2 and 2. So this means I'm going to sell 2, buy 2. This is a 2 count credit spread. So that's how you would increase the contract sizing. Perry Rick says, can you use the QQQs or just SPY? Yeah, you can use QQQs if you want. If you want to import my bot, like I mentioned, you just click on the clone template. It will take you over here to pick an auto trader and then your templates. And you'll see the bot here. Let's say I want to run the daily active on QQQ instead of SPY. I'll click on start using this template. And before I save it, I'm going to go back a couple times and change the symbol to QQQ. And then all the settings will stay the same as I set it. And now I have a QQQ opening range breakout bot based on my settings. So perfect. Richard Hammer says, if I do a 1-1-1 for long-term bullish, how far out should an additional long put be for the 1-1-1? Okay, yeah, great question. You were talking about defining the risk on a 1-1-1 by doing a 1-1-1-1, which can easily be done. It really just depends on how much you wanna run it. Here's a great new feature that we can talk, not new, but a great feature inside the software that we can talk about. So right here, I have your 1-1-2-2, which is that strategy. And we'll just make this, a -1, and we'll make this a 1. So now we have a 1-1-1. So we're gonna do a debit spread, and right here it defaults. We're gonna do 10 delta here, and then we can default this to 5 delta probably. And then here's what you can do. You can easily structure a trade as you wish. Best to do this on yes, probably. I do this. I'm just gonna skip through because I want to show you the setting here. But that's how you would structure it. But here's a great way to test if this is an actual bot that you want to place. So I come into here, the auto trader, I go to ES. This is the one that I built. If I come in here to this and I look at, okay, I built out the legs to enter this way. I want to make sure that it's going to do it correctly. There's this trade preview. I can click generate trade preview. Might take up to 30 seconds. It could take a bit. It's going through and taking all these trade detail settings you created and actually picking a bot move to enter right now. So you can see here it goes 90 days out to February 20th. It's going to pick the 25 delta, 23 delta, and I can see exactly how it's structured. And then what I can see here is 105.96, right? So that's about, what was that, 10 bucks and 20 bucks. So you can see here, I'm making an $11 credit. Why did I want to show you this? Because it doesn't really matter where that delta is on the last leg, as long as I'm collecting a credit, right? As long as the money I am making is a credit. This trade is a credit trade, right? So I put it up to 7 delta or maybe 8 delta on this long leg, then it would be a completely different trade because I wouldn't be collecting enough credit. So if I want to collect more credit, I can change this to a 4 delta, 3 delta, and it will collect more credit because there will be a greater difference here. But with the trade preview, I can see that inside of there. So it's a great way to test. Okay, I just set up these trade details. Is it actually going to pick the strike prices and the dates that I want? And I can see exactly how it would do it by looking at the trade preview. Okay, let's see. Johan says, these bots will close a certain profit or loss levels, but sometimes it'd be better to close the bot manually. What info could help here? Yeah, great question. So if you want more manual control over the bot, let's say it's long-term bullish, right? Let's say I don't want it to manually exit for me, right? Let's say I want to close it myself. I can come in here to settings, and there's this cool setting here underneath management. And if I go to all settings, this is a fun thing I can do right here. If I scroll down, what to do when take profit is hit. By default, it's going to exit the trade. I can also do notification only and then save it. What does this do? When it hits my take profit target, it's going to send me an email saying, hey, this trade has hit the take profit target. We're not going to close it because you don't want us to, but just so you know, it's ready to be closed when you're ready. And so it'll send you an email notifying you that your take profit has been hit, and then you can go in and close it yourself. You can also do that with the stop loss instead of exiting the trade. You want to do notification only. This may be risky, obviously, because you want that protection. And then if you ever just want to close the trade yourself, let's go to one where I have active trades. Let's see right here. And they see how I have this trade here, this red X. I can close this. I can close the entire trade. If there's multiple legs in the trade, I can close just one leg. And then I can just delete this trade from our system if I don't want it. But right there, you can just close the trade with that button too. So it's super easy. Anything you do through the broker, you can do through here. Okay. Martin says, are your bots working with interactive brokers? No, I reach out to them once a month. I just reach out to them again Monday morning. They only allow integrations with people who are registered with the SEC. I'm not, because I'm not an investment advisor. I just an automation software, so they don't allow me to integrate. Hopefully, by the time I send them a 110th email, they'll allow it. But it is something that I'm working on. Yeah. Can I please rewatch this webinar? Yes, the replays will be available until Friday. Then the replays will get taken down. So I will send a replay out after this goes live or after we end this. Aiken says, can you show a webhook setup for TradingView and what information is being interfaced? Of course I can. I want to get to other questions first. That's a little bit in depth, but Aiken, I will get to that here. Johan says, could you also have a payoff graph in the trade preview? You're reading my mind. That's actually on the to-do list. So that will be there here in the near future, just to fully see that, but it's not there yet. Mark Johnson says, where are the recording replays for the 3-day sessions? I'll send you an email. I think there's an email that will be sent out. I will send it out as soon as I can, but probably an hour after we get off here today. You will get an email about, hey, here's the replays, and we'll have the replay to this one and to yesterday's, and they'll be up until Friday. Okay, that is how simple it is to build out your options bot portfolio, adjust it to the market, and run bots like that. That is everything you need to do. So if that is you, please go do that. That's your homework. Go set that up. Super simple. And then we'll be ready for tomorrow, which is the small tweaks to easily profit. Okay, perfect. Aiken says, I'm colorblind. Can you put a minus sign? Don't mean to laugh. I'm just like, man, I didn't think about that. I should have that. You're right. Yeah. Aiken, I will get that added for you. Should have crossed my mind. Kyle says, come on, talk about your service pricing brokers. Yeah, you guys can start a 30-day free trial. I will talk more about pricing tomorrow. I have a huge Black Friday offer that I will share with you guys tomorrow. So make sure you're here live. If you want to hear about it, you'll learn all about pricing and the crazy deal that I have for you guys at the end of tomorrow's session. So we'll do that. Okay. Can I set up more than one demo paper trading portfolio? Yes, of course you can. Go do it. And yeah, you'll be able to do that. Perfect. Thank you. Sure looks like you've done a lot since the huge announcement when I joined with Lorna was promoting this. Yeah, Lorna was one of the first promoters of this way back in the day. We've added so many amazing features to make it way more simple. Mark Johnson says, yeah, Black Friday deal. Absolutely. You guys will be the first to hear about it tomorrow at the very end of that presentation. I will talk about it, so make sure you're there for it. Anyways, that's all I have. For the last 5 minutes I have, I do want to answer Aiken's question, which is more complex. So if you're someone who is not technical, as in you don't have a coding background, please leave now because I don't want to confuse you, but I do want to answer Aiken's question. If you want to set up an automation based on TradingView, maybe you built a custom TradingView indicator, or maybe you use an indicator from LuxAlgo or something like that. You really love something like, let's say, this hyper trend, or let me find a better one. Indicator. Look at how it has Fibonacci ranges, maybe. Oops, I added it twice. Fibonacci ranges. Let's say you have some indicator on TradingView that you absolutely love that you want to trade based off of. We have a TradingView webhook integration that's super simple to do. Okay. First thing I need to do is define when am I going to enter and exit this trade based on the TradingView chart. So if I have this indicator here, maybe once it hits this bottom red zone, I want to sell a put credit spread to profit from the bats, right? Something like that. So I'm going to put this indicator on the chart. I'm going to go to alerts. I'm then going to put once price crosses up above, and I'm going to do the value, LuxAlgo. And again, I'll have to figure out what plot is what plot. But yeah, basically, once it breaks above a certain plot, I'll have to make sure, confirm it's that one. But basically, I say these settings here, once it breaks, goes below and breaks above this plot, then I want to trigger an entry. Perfect. Now, how do I connect this entry to the bot? I go to notifications. I go to webhook URL. I go to here. Let's say this is the bot that I want to enter. Just a simple put credit spread, right? Well, I'd go into here to the settings, entry rules, go to advanced settings. Right here, there's a enable webhook for this auto trader. Go ahead and enable it. Click generate webhook URL. What do I want to do for this instance? I want to enter the trade. So I'm going to click enter, and then I want to do my preset rules. And so that gives me this. I will copy this and I will paste it into here. And just like that, now it's connected. So whenever this triggers, when price breaks above this indicator setting, TradingView will signal off an alert. That alert will trigger our system and trigger this bot to enter a trade. Then it can manage based on your take profit rules and stop loss rules, or you can even change it so that you have another webhook that fires to close the trade. All right. Sorry, getting technical for those of you who aren't technical, but that's how you can connect it to a TradingView to literally automate based on any indicator in any market setting. But across the board, you don't need to do this. David says, does this webhook work with Thinkorswim? No, Thinkorswim does not trigger off to different URLs, sadly. It is something that I hope they add, but not yet. So you can't do that. Only through TradingView. You can do other platforms to use TrendSpider or Zappy or anything like that. Anything that can trigger a webhook can do this. Yeah. Perfect. All right. That concludes our hour-long training today. So glad you guys were here. Make sure to be there tomorrow because we're going to cover even more amazing things. All right. So yesterday we covered the basics of understanding that all option strategies work when you run them in the right market, how to align those two together, how to build protection strategies that bolt onto those main money-making strategies to help protect them. Today, we actually deep dive into the software to show you how, unlike ever before, anybody can automate any strategy just by clicking a few buttons. No coding needed, no complex knowledge, no if-then statements, right? You just say, hey, I want to do this strategy at this time, set it live, and you're good to go. So you learned exactly how to build your options bot portfolio. I even gave you the bots that we built together. So even if you don't want to do this yourself, just click on the bot template links and you'll be able to have them and use them with one click. Tomorrow, we're going to go over the small settings you can add to decrease your risk, to make more money, and to just help you out in general. These are the settings that most people overlook, but can massively increase healthy performance of your bots. Plus, as I mentioned at the very end, I will talk about a very special Black Friday offer that you guys get first access to because you are here on the training. So thank you guys so much for being here. I will see you tomorrow, 12 p.m. Central, 1 p.m. Eastern, same time, same Zoom link. Make sure to be there, be square. Can't wait to see you guys. And yeah, the replay will be up in about 30 minutes or whenever I can get this edited and out to you guys. All right, guys, enjoy the rest of your Tuesday. I will see you tomorrow.